Tina here once again from ShortMeTina.com with my daily recap. Before we get underway with a recap of the overall markets, let me welcome you. If this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. If you are returning and you are, again, a recurring listener, I want to say welcome back. Thank you so much for sticking with us. All right, now to what has been going on in the S&P 500. So right now what you see on the screen is a chart of the SPY daily chart dating back to 2017. We're up about 1.51% on the day to close at 292.42. So before I zero in on a smaller time frame, I'm going to zero in on the hourly. Before I do that, let me just highlight a few levels for you, levels that I am paying attention to. First level I'm paying attention to is this most obvious one. We can call that resistance. That clocks in at around 293 to 295. For the past few trading days, dating back to when this pullback started, you can see the markets have made several attempts to get above and sustain that 293 to 295 hold to no avail. All right. On August 2nd, we went as high as 294.12. Then we had this bit of a mini collapse, and then we shot right back up, going as high as 293.62. Close, no cigar. And then the day after that, we went as high as 293.24. Again, close but no cigar. Today also, we made a bigger push, right? We went as high as 294.15. And I said, well, granted, it looks like we're going to close above 293. That did not happen. We ended up closing at 292.42. So this should tell you that 293 to 295 area is in the not even the shorter term, it is a significant area. Even going back all the way to September of 2018, we actually touched those levels 293 to 295 before collapsing all the way to December lows of around 234.27. Then we had that pullback all the way once again back to that 293 territory in May of 2019, and then we had that 7% correction or so. We finally broke through. We hung above that 295 area for about 2 months, and then Fed J. Powell came out with rate cuts, and then you had that subsequent pullback of around 7 to 9%. So 293 to 295, super important. In the shorter term, I'm paying attention to 298 because during the midst of this collapse, 298 served as the high for 3 consecutive days. And for the past 4 days, for the past 4 consecutive trading days, it has served as the low. So we consider 288 that pivot. Anything above there, things look relatively bullish in my opinion. Not extremely bullish, relatively bullish. Anything above 295, extremely bullish in my opinion. So first level resistance of 293 to 295, shorter term support of 288, and then we have this longer term support now, this longer term resistance now support of 280. You can see it here dating back to 2018. I'm going to wrap it up really quickly. Try to get above 280, couldn't do it. Here. All these several attempts to get above 280, we couldn't do it. So that's another level that I'm paying attention to. And this level right here around 273 where we've gotten that bounce a few times in which we've pulled back. So that's 1, 2, 3, 4 level. I'm not going to talk about here because we have some other levels to take care of. So let me repeat, 293, 288, 280 and 273. Those are the levels that I'm paying attention to. So again, I said I was going to switch to a hourly time frame just to see the nonsense, in my opinion, that went on today, right? So it looks like it looked in the beginning as though we kind of were pulling back for the day. Then you had this huge spike early in the morning. I guess the president tweeted that he might be delaying tariff, hence perhaps why we had the spike in the market. But since then we had pulled back and we kind of like traded sideways. So on a very smaller level, what you can be paying attention to heading into tomorrow would be around that 288 to 290 level. We closed at 292.43. If we start to drift towards 290 and then 288, it looks like this pop might have been something out of the just very reactionary to the news, and the market decline will continue. So that is a 4-minute wrap up of the SPY, but that's sort of what's going on in my mind. All right. So what else do we have? The recap in the IWM is always slightly faster. Again, IWM daily chart dating back to 2017, up about a little over 1% on the day. We closed at 150.26. Like I said, I'm only going to be paying attention to 2 levels with the IWM because it's really 2 significant levels. First level is support. We can call that around 144 or 145. Then we have resistance. We can call that 160. wherever the IWM breaches, whether it be above 160 or below 140, in my opinion, that's going to be the direction of the market. So if we break 140, which we call support, I will lean more bearish at that point. If we break above 160, I'm going to lean a lot more bullish at that point, right? So that's what I'm paying attention to with the IWM. What else? All right, and we have a ticker DCPH daily chart dating back to October of 2017. So huge congrats to the bulls. The stock is up about 80% on an analyst price target of around $62. So we didn't quite get to $62 today, but an analyst at Deutsche Bank really think that this is a possibility. One of the reasons why the stock shot up so much today, going as high as $42.99 before retracing and closing at $35.90. Our close, believe it or not, is actually very close to the low of the day. The low of the day clocked in at $34.15. So heading into tomorrow, obviously you want to pay attention to where the price opens up, and you want to pay attention to today's low. If we dip below today's low of $34.55 and cannot get up, chances are I think we're going to fall back down. Not necessarily seeing a gap fill yet, but more than likely I could see a print before a pop of around $28 to $30. So that's my take on ticker DCPH. What else? And then we have ticker RKDA. Daily chart is off about 12% on the day to close at 609. So I did say yesterday, you want to pay attention to the open. That'll dictate whether or not the stock has the engine or the fire to run. We closed yesterday. Yesterday's close clocked in at 693. Today's open was 723. So we did open up higher than where we closed, which should have signaled more than less that the stock was ready to pop. It did pop a little bit, going as high as 734, essentially a penny short of yesterday's high. Couldn't sustain the move, and the stock eventually pulled back to close at 609. So heading into tomorrow to see whether or not the sell-off is going to continue, I would pay attention to 6. Anything below that, and more than likely the selling will accelerate, in my opinion. So heading into tomorrow, for me, the number to pay attention to would be around $6. What else? And then we have ticker BE daily chart off about 42% on the day. You can see it clearly broke longer term support. We can call that level around $9 after a gap down today. Again, we closed at 460. You can see selling definitely with confirmation and selling volume going as low as $4.54. So the close clocked in relatively close to the low of today. I believe it's up a little bit marginally in after hours, but again, that's to be expected when a stock loses so much in one day. So heading into tomorrow, you definitely want to pay attention to, personally, I would be paying attention to today's low of $4.54. If we break that level, chances are I can see this declining another 5 or 9%, and that's my take for now. I'd stay out the way until the stock kind of finds itself, until the dust settles, so to speak. So yeah, that's kind of my take on ticker BE. What else? All right, so let's wrap it up and round it out with ticker RMED. Daily chart off about 57% on the day. So it sucked to be a bull today if you are long ticker RMED. Stock closed at $1.21. The low of the day clocked in at 109. So we're a little bit off of today's low. A little activity going on, and after hours is up about 6%. So that might be, I'm not sure how to interpret that. I mean, stock is off about, again, north of 60%. It's only up 6% in after hours. That could just really be that bounce. So again, closed at 121. What I'd be paying attention to tomorrow, obviously, would be how the stock opens up and paying attention to today's low. So if we open up slightly below the close of 121, and if we can at least maintain the low, not trading below 109, I think things should be okay. You might get your 10% pop or so, but any stock that's off north of 60% in one day is fundamentally broken. So at some point, I expect ticker RMED to drift below $1. You can see this trading in the 80s or around 80 cents, 90 cents within the upcoming weeks. So I wouldn't even look to go long ticker RMED, but that's just my opinion. Will you get your pops? Yes, you're going to get your 10 to 15% pops. Again, anything that's off 60%, you're going to get your dead cat bounces, but the chart, in my opinion, is fundamentally broken. Any stock that's off 60% in one day is not a stock that I want to own. All right, so let's wrap it up there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like you to do 3 things for me. 1, comment in the comments section. What do you think about my analysis? Are you in any of these stocks? What about Trump's tweets, the tariff, China? What are your thoughts? Again, comment in the comment section. Two, I do videos daily, so if you don't want to miss any, make sure you are subscribed to our YouTube channel at ShortMeTina. There's been a sort of a stall in subscription, so if you like this video, please do us a solid. We don't advertise. Just hit that subscribe button and like the video. It'll get things circulating. And lastly, I've been trading for well over 15 years. If you think you can learn anything from me, then make sure you head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow.